Hello, what's up everyone? I'm back with another video. I've been quiet for a little bit. I've been working and studying, and I wasn't even supposed to do a video today because I'm supposed to be studying because a lot going on. I'm tired, and you probably would have thought, oh, he's gone quiet because he's lost money, his leverage portfolio has blown up, yada yada yada. My last video is why I have a disdain, hatred towards bears, and even got into it in the comment section there. And then the market dropped; it had a sudden drop. So I know a lot of you people were probably thinking like, yeah, he's gone silent because his market's probably down. But you could not be further from the truth. Your boy is up all-time highs. Life is looking good. I've got a couple new positions I want to talk about today, what I'm getting into. Yeah, we're killing it. So yeah, if you're a bear, honestly, get out of here, mate. No, it's all good. It's all good. I've got some bear positions on at the moment, actually, which I'll break down. So this is a classic portfolio update. I've been doing these for a couple months now. I'll speed run the backstory, skip a couple minutes because I feel like explaining this every time is going to start to get annoying to anyone who watches these regularly. But basically, I started this fund. I don't want to go right back, but in 2023, I put $2.5 grand in, and let's clear things up right now, because you probably show your portfolio, show your all-time portfolio returns. Why are you hiding that? You're only showing the 1 year. You probably had 50k, now you're down to 14, and you're gloating that you're up. No, interactive brokers, for whatever reason, if you withdraw money and put it back in, it screws up your all-time returns, which is painfully annoying. But if you look back here, I started about $2.5 grand. I was messing around with some option trading in early 2023, took the money out. Can't even remember why, to be honest. I think I might have bought a house around this time, and I used every cent I have to my name. I also brought, and this time this is going to lead into something I'm going to get into today. I brought a physical bullion of gold. I brought 1 ounce for about 1,800 Australian? No, it was 1,800 US an ounce, which is like $2.5 grand Australian, or $2 grand Australian, or whatever. With the money I withdrew for this, yeah, it was about that time too. That went up a little bit. I'll show you where this story circles around. I bought it at 1,800 US an ounce. I had a physical gold bar an ounce. It went up to above 2. I think it went to like 2,200 US or something like that, maybe 2.1. I sold. I've only done this for a couple months. I thought I was a genius. Gold is above $4,000 today, so I would look not too bothered because I've outperformed that since then. So it is what it is. But I thought it was like gold was through the roof. I actually thought gold has gone too high. Sold that bit of bullion, made about a $500 profit, which is pathetic. Honestly, I should have just held it anyway. Put it back in my brokerage account. Started trading options again. Option returns have been hit and miss, but mainly I was trying to learn options. I mean, the money I put in this specific account is hands down money I'm willing to lose. If you're first time watching this, I'm doing an undergraduate degree in mathematics and statistics at the moment, part time. I'm on my 2nd year while I work in the mining industry in Western Australia full time. So a lot of long hours anyway. So I'm going to be financial analyst, derivatives trader, whatever, in the next sort of 3 years. That's the plan. I'll probably do a master's after this actually, but let's see how we go. But why I'm saying that is because I put money in this account because 100% wanted to, I've read so many books on derivatives trading. I mean, most of the books behind me is on options, but I want to get my hands dirty and actually, get into several different option trading strategies, understanding implied volatility. I just want time in the market with that. So I put the money back in here just so I can mess around with derivatives as like a tuition fee, basically. And it was not only for some, but for me, it was a very small amount. So that's why I created this fund. And I was messing around with derivatives. I did buy a stock on the ASX called Raise. I held that for a year and a half. Got out at about a 70% profit there. So I went from 2.5 to about 5 to about it's around $5 grand once all said and done. And then I started self-managing and investing in stocks, making stock picks, making stock plays, making some option plays as well around this time this year. So only about 3 months have I been actively trading and actually taking it seriously. But I decided about 3 months ago to share this with the world. And because it's only like a kind of a slush fund, it's not my main portfolio, it's not the bulk of my capital that's invested in the market, I thought, hell, let's just share this and be completely open. Instead of one of these fake gurus that are like telling you to buy shit and they're only showing you their paper account. This is 100% my real account. I'm making real trades and I'm going through my thought process and everything like that. So since here, about 3 months ago, I've been open and honest and showing my live returns. And a little bit of a challenge is we're trying to go from 2.5 grand to $1 million. Very, very clickbaity. I'm not an idiot, guys. I know that that's just probably not going to happen, but fun little goal. Let's just keep ripping, man. Yeah, I'm not taking this too seriously, so I wouldn't advise following in on my trades. My trading mindset is I'm willing to lose every single penny in this account, all right? And I will stand by that until I one day might achieve this challenge. So if you're not in the same mindset, do not follow my trades. I'm taking risk that is, I would never advise someone to take the level of risk that I'm taking. I'm trading on leverage and all sorts. I'm not doing it as like a complete idiot, all right? If it looks that way, I apologize. But I am taking risks that I generally wouldn't take. A trading account that I won't disclose with you guys because it's like the bulk of my money that's invested, the risk is nothing like it is here. And it's honestly mainly passive investing into diversified ETF portfolios, okay? Money I'm willing to lose. Let's just make that very clear right from the jump. Okay, now let's get into where I've been at lately. Last video, I think I was like an all-time high and I might have touched 11.5, 12. Now we're up to 14, and that was only about a month ago. I had a couple market port crashes since then. So let's zoom in. We'll go for performance view. So over the last year, by the way, just looking at, because this is frustratingly and annoying, it doesn't calculate the actual all-time returns. But you can see if I just go by year, that we really got the account started, honestly, 1st of Jan pretty much, end of last year. So clicking the 1 year is probably your more realistic view of performance, all right? So over the last year, we're up 155%. If we're going to staple it to a day, which is probably a fair assessment, is stapling the returns to a day, because the problem with the year is it's rolling. We're at 114 since Jan 1st this year. So we're pumping, we're doing well. So we're doing well, and that line is compared to the S&P 500, just completely mogging the S&P. Over the last year, they've done 19, I've done 155, so don't even look at me, S&P 500, don't even look this way. All right, let's go over some position changes, because I've got some interesting trades I've been getting into lately. And it's interesting. I'll give a little bit of an update on LEUs. I know a lot of followers have followed me because of that stock, and I hit an all-time high in LEU at 130%. I was up at one point recently, and it's pulled back, but we'll get into a bit of that. Some of my other positions, I got a short position on gold, and yeah, we'll get into that. Now, this might be the last time you see my portfolio at an all-time high. The reason is I've got 6 aggressive earnings events coming up over the next 10 days. My whole port is going to go, and these earnings are like this. The volatility around these earnings is violent. I got AMD earnings, I got Reddit earnings, I got LEU earnings, I got UNH earnings tonight. I've got earnings on a stock I've gone short on. After 10 days, this account is either going to be up to 20 grand or it's going to be down to 7. I'm either going to get sliced in half or double. Mark my words. That's the two options we have. Because all the earnings events are like a lot of anticipation around them. Like as the overall market, everyone's eyes are on the earnings events that I'm involved in. So it's going to get rough, man. Like I thought I'd do a port review today because it could be it could be the enemy. Now I'm leveraged to about 1.8, so that's what I mean. Like I could get sliced in half within a blink of an eye, or I could double. It could go the other way. How much can my port even handle if I'm leveraged that much? Well, if we go to, so I need 7,585 of maintenance margin in my bank account, all right? So I think how it works is if I get sliced down below that, I'm going to receive a friendly little letter by my brokerage saying, margin call, please pay up. You have an hour. If I don't, they're just going to start selling off some of my positions. And you can see I've got 6,700 of excess liquidity left. So I can technically buy $6,734 worth of stock, but the problem is if you keep using that, it closes the blanket of maintenance margin that you have left to play with, meaning a smaller percentage decline is going to get you to a margin call faster. Now, I've gone aggressive with margin. My loose little game plan is if I can reach that 25K account size, I'm about $10,000 off, I'm going to peel back on the margin a bit. Being a small account and trying to double it or whatever, the only way, man, is to increase your level of risk. Or be very patient, actually. But once we kind of get that account size going, if I can get to the silver lining, to the other side, into this sort of 20K plus range, I can dial back that margin a bit. Now, I'm going to stick with around a 1.5 leveraged account all the way through, all right, through this whole challenge. I'm at 1.8 at the moment. I would like to bring that down. Now, by the time, if I don't buy any more stuff, which is a problem because I keep doing that, and if my account gets to 25K, that might actually bring my margin down to 1.5 anyway, so I might not have to sell anything. Cross that bridge when we get there. That's a tomorrow issue, mate. We'll see after earnings, right? I could be destroyed over the next week. So if you don't hear from me in a while, it's probably that. No, if I get wrecked, I'll do a video about it. One thing I noticed just now, a little bit of a dividends payment. I don't even know what I own pays dividends. That could be SPY or UHN maybe. Let's get into some positions. Okay. Actually, before positions, let's cover this real quick. So I've just done a quick little bit of stats to do with this trading account, and just basically show you where we're at. So official start date was on 6th of June 2023, but I told you honestly, I done fuck all for like a year and a half, but I do want to be honest and fair, right? Like basically I could say my start date was this time last year because I just showed you guys that. But anyway, let's be honest. That's when my account first started trading or whatever. So the time in the market is 2.4 years. Starting capital, $2,500. Current size is $14,300, which is $11,800 return, which gives a 473% profit and loss over the last, say, 2.5 years. That averages about per annum. It's about 197% return each year since 2.4 years ago. So my average is about that. Doublings, I thought it'd be something interesting to track. I've doubled by about 2.5, and I've got a doubling count here as well. So to get to 1 million, I need approximately 9 doublings from $2,500. I've doubled it to 5, so I've crossed that one out. I've doubled it to past 10, we've crossed that one out. And we are almost halfway to get to our third doubling. So 2 out of 9 doublings are done. I've got 7 to go. So each doubling is going to be like a big milestone for this account. Where it's going to get sketchy is having the balls to keep this level of leverage and this level of risk and to just continuously bankroll into stocks, all the way to the objective goal of $1 million. But I'm committed. Because the problem is I'm worried about a mindset shift. I'm fine now, still content with losing everything if it goes that way. Whatever. Slush fund, that's my mental agreement with myself. Will I have the same mindset if it's 20, 40, 80, 160, like when it becomes to be not a life-changing amount of money, but a money that can really make a difference in your life? Because I need to have that same mindset, but that mindset could start to shift, which could affect returns. Anyway, I'm acutely aware of that, and the leverage is 1.8. 7 doublings to go. let's just keep chugging along. All right, port update positions. LEU, we're up 84.7%. That's when I got the position. We went all the way up to 464. Now we're down to 364. Life was good here. I was about 130%. Now, no, I'm not selling. I'm going to continue to hold. We've got earnings coming up on LEU. Let's have a look. I think it's next week. Yeah, next or Wednesday. Earnings predictions. Not looking for anything great. This stock isn't reliant on earnings plays because they're still, I'll say pre-production. I was going to say pre-revenue, but that's not technically true because they're getting revenue from dealing enriched uranium. But they're kind of more pre-production because we're still waiting for their LEU and HA-LEU facilities, uranium enrichment facilities, to get up and running and start producing money. That is quite a way away. We're in the year, multiple years away from that. So just going to keep holding. This is a multi-year play. Don't really have too much to add. Still stick behind my due diligence on this one, and we're just going to keep riding this up, expecting some volatility, whatever. If it beats earnings, cool. If it doesn't, probably still going to hold. So we're up. All these positions, by the way, I got into roughly the same amount of time within the last sort of 3 months. All right, next player. AMD's up 54.8%. AMD's been doing really well for me, actually. These are I should have mentioned these returns are priced in US dollars, so that's closer to a $2,000 return. Brought in here. My buy-ins have been just fucking absolutely on par. We'll see that this line represents when I got a position. And everything I'm getting a position in, or I have, probably luck and a little bit of like intuition after trading stocks for many years. I've just got solid buy-ins. It just keeps my buy-ins keep happening to be either on a dip or right before it takes off. So honestly, probably more luck. But yeah, there's a few things I do when I get a position on a stock. Like I never buy in right after all-time highs and things like that. There's a couple rules I generally follow. AMD looking good, mate. Brilliant. Done a deal with OpenAI, up 54.8%. Will I be selling that soon? No way, Jose. I mean, look at that fucking green stick just all out on its own, just full in exploration mode, just above anywhere it's ever been. It's like a ship back 500 years ago exploring the new Western world or some unknown territory. Look at that all on its own. No resistance, no support, just hanging it all out there. All right? Hanging it all out there. Big swinging dick. I'm currently reading Liar's Poker, so if you read Liar's Poker, you would know what I mean. Earnings coming up. Again, next week, Tuesday, post-market, Tuesday the 4th. This earnings, be nice if it would be good, but look, this earnings is nothing really there I'm looking for. I'm more looking for a good forward guidance because 2026 we're expecting earnings to really ramp up with AMD. So not expecting much from this earnings. I'm more excited for the 2026 and onwards earnings because I've got some big contracts coming in that should really turn the earnings are still pretty good. I mean, 8.74 billion in revenue, whatever, but it's going to really press this company a lot bigger in 2026 if their contracts work. I'm talking about contracts with OpenAI and whatever. But yeah, more the forward guidance is what we're after in the Tuesday earnings for AMD next week. And even though I just said we're more excited for the 2026 earnings, market's always forward-looking, so they're probably pricing that in as we speak, hence the recent increase in share price. So, again, not tough to say. Obviously, you want a good earnings with everything, but not really a make or break earnings. Like if earnings is as expected or even slightly lower and we get a 10% pullback, still going to hold that one. It's not a make or break. So, looking good. I've only held AMD since Where did I get in? It was like August or something. No, I got in just before their previous earnings. And I remember their previous earnings weren't great and actually dropped by 5%. I was down by 12% at its most. So weathered the storm and it fucking, paid off. Okay, the third biggest increase in my portfolio percentage-wise. So I'm going down in order of returns. I've shorted gold. Now, I know you're about to call me a fucking idiot. I just know it, because everyone's bullish on gold at the moment. Everyone is. 50%. How long did it... And it's an option too. I brought a put option. When I say short, I didn't short shares. I went short put. Don't have the account size to short shares. I don't have the balls either, because I really... And I don't have the margin anyway, but I really don't want to be exposed to theoretically unlimited losses. So I paid the premium and I got a put contract. I got the December 31st 360 put. I got that market close on Friday, just gone. So technically I've only had one trading day and I'm up by 50%. The position size of this was a $530 US put, so you're looking at about an $800 Australian dollar bet. That gold price is going to go down. I tried to do some research, some digging around on Reddit and Wall Street Bets. Terrible place for research, but value investing, just to get a feel with the market. No one thinks that gold is going to go down. And I'm literally, from all I could find, I was the only one that's like, I think it's going to drop. So far, I stand corrected. 50% increase in my puts value over the next day. Could have taken profits in, could have driven off in the sunset, but I am not done. So let's look at gold. How I done this, by the way, is I'll spit a bit of game for you guys. GLD is think about SPY. SPY is an index for the S&P 500. Tracks the S&P 500, all right? GLD is that. It's even the same sort of company that does it, ARCA. Or is that an exchange? Honestly, God knows. It's basically SPY, but for gold. So it tracks the gold price. It's 1-to-1. But that's why you're looking at a 360 price for GLD. That's not the price of gold. Price of gold's $4,000 an ounce in US dollars. Now, because I didn't want to... This is the actual... If you want to follow gold, you're following this. This is gold price in US dollars. This is the actual gold price. And you can zoom back of where it's been over the last 10 years or whatever. You can go all the way back. This is the actual price of gold. The most rawest move on gold would be to trade future contracts, to trade the commodity directly. And it would be to sell a futures contract if you were bearish on gold. If you do that, you have to do something that's called post-margin. And then if you buy it in lots, I think the lot size is 100 or 1,000 or something like that. What's 100 times 4,000? 400,000. My brain is cooked. Would you believe it if I told you that I am halfway through being a qualified mathematician and statistician, and I just used my calculator to calculate 4,000 times 100. When I'm singular focused, when I'm focused on one thing, I cannot remember how to do anything else. Anyway, that aside, $400,000 would be the total position size if I decide to short gold, short the commodity directly. And I think that's, did I times that by? Yeah, that's a one lot size, I think. Whereas the lot size done in thousands. If it's done in thousands, that's a even bigger position. But yeah, that's right. So about a $400,000 position. My portfolio cannot do that. We have to post margin of that, and I don't know what margin would be. If it's 10%, you've got to post $40,000 margin, all right? Account size isn't there. And I want to go short gold. What do I do? Okay, well, we have a index that tracks the price of gold based in US dollars called GLD. GLD is a highly liquid index with optionality. So there's options on that index. meaning options you can trade, put options, call options, which is just, without getting in the weeds of that, bets that the price can go up and down. Now you can buy or sell puts and calls, whatever. But also, I could short GLD. I could short the shares of GLD, which instead of being $4,000 is only $360 or something like that at the moment. So I could short that again, and I could short it in how many shares you want. So I could get my position size down and my risk down. But I'm not fully convinced. I'm like 60-70% convinced that gold's going to go down. Because I'm not fully convinced, and gold could still go parabolical, right? It's been trading like fucking Bitcoin at the moment. I'm not willing to risk my portfolio and potentially having infinite losses on the upside. If gold goes up and I'm short, I could be screwed, right? You can lose more money than you have in your account if you do that. But it is a more raw form of trading because you don't have to pay for that implied volatility of options. It's far more pure of a form of a bet against the market. So I just decided to then buy a put contract that's out the money and get a risk that I'm comfortable with. Because if you buy a put contract, the amount you can lose is only the amount you paid for the contract. I was willing to accept a $500 US risk. Okay, that shows how confident I am, and that's a proportional risk to my portfolio size. If my port was 100K, maybe I'd risk $5,000. You got to take proportional risks when it comes to trading. Position sizing is honestly your number one key, above almost everything else. It makes or breaks your portfolio. Okay, so proportional risk talked about. So what I've done, that's the price of gold, is I've taken out a put contract with a 360 strike, which is this purple line, expiring December 31st. So where I'm going to make money is if this price of gold on GLD, which tracks the actual price of gold, drops below 360 by December 31st, and we're looking gravy. How am I up by 50% already? Well, that's because even if this goes down and doesn't touch this line before expiration, that option is going to get more and more expensive. Now, as each day passes by, theta decay will eat into that contract. But if the price moves faster than expected, which it did, we had almost a 3% drop, you can make money, you can double your money, you can triple your money, even if it doesn't necessarily reach your strike price. The biggest thing about being long options is you're not selling, you're buying them. I know this is a short trade because I'm betting on the price go down, but I'm buying them. The biggest thing about long options is exponential returns. What I mean by that is if you think a stock's going to trade in a linear fashion, meaning picture a graph and every day it just moves in a straight line. It can move up, but in a straight line. Don't trade the options. If you think the stock's going to move exponentially, meaning the returns are going to look like a ramp, either up or down, right? It's going to the equity is going to be curved pretty much, and it's going to be steep. If you personally believe that, options can be a fantastic trade. Because I'm predicting, my analysis is a fast drop in gold. An option would be the correct move. If my prediction would be a slow, long, drawn out drop in gold, perhaps going short shares would be the move. I've gone for the option, if that makes any sense. Okay, so that justifies my reasoning for the tool that I have chosen to short gold. Okay, I've chosen a put contract. I've given myself about 3 months for that to take place. Well, 2 months now, to get below this point. And because we had a sudden drop, the price of that option has gone up by 50% overnight. So that's how we're looking. Also, the quicker I reach this line, the faster my returns come. If I reach this line by Friday, that option's value might be double, triple the amount. So I would have made 100 to 200% return by the end of the week if it reached that line. But if it reaches this line on expiration, I haven't made any money. The returns have been too slow. It's been too linear. See what I mean by exponential returns? Okay. So, pretty sweet, right? 50% in 24 hours on gold. because we had that fall. Now, let me give you my full DD on gold in less than a minute, which is a Neanderthal DD. First, I want to do, this DD is shit. It's honestly not trading advice, definitely not. My research and conclusion was about 5 minutes worth. Here's what I think is going to happen. What are you looking at? The line is the $4,000 line in the price of gold. When we're trading stocks, the idea of support and resistance isn't even proved, right? I know that might rub people the wrong way. The reason, that does look like it, but this isn't a stock. The reason why it's not necessarily proved in individual stocks is stock announcements, dividends, earnings, news articles. A big firm decides to pump up the stock. These are all events that you can never see coming, that push that price around and do not give a rat's ass about support and resistance. I'm not saying it's not a thing in equities and stocks, right? I'm saying it's less of a thing. Now, because you got things like people trying to price in forward earnings and all that, right? It gets squirrely and complicated. Now, if we're talking about things like gold, Bitcoin, cryptocurrencies, things like that, that are more, I'm going to keep careful how I say this, but let's just say store of value. Well, we can say store of value on gold. It's an argument to say store of value on Bitcoin. But I think the point still stands. The only thing that truly drives things like gold is human emotion. That's really it. And I know that the same philosophy can be applied across the board to stocks and everything. But if you know a stock is going to pay its investors X amount of dollars via dividends or whatever, it can be priced by that. If it's too cheap versus the dividends it's potentially paying, more people are going to buy that stock. If that makes more sense, you're more betting and more putting your money in a company, you're more owning a company and hope to get future returns, right? And most of us don't trade like that these days, way more speculative, but that's still the nuts and bolts of stock movement. Things that are like gold, there's no return in gold. There's capital returns, but hear me out. There's no return in Bitcoin. Yes, you can get a return by the stock going up. Okay, that's not what I'm saying. I'm meaning you're not invested into a business that can give you returns, that can give you dividends. That's what I'm getting to. Now, when you have situations like that in these sort of gold and silver and Bitcoin, it's far more likely that the price movements are way more based on emotions. Okay, central banks, whatever, buying price of gold does push the price around. But when we get things like this, when gold's busting through key support levels, the 2000 support level, I'm just trying to make a point here, and this is like not even the smartest point to make, but we're going to make it anyway. Let's do the 3000 as well. Yeah, okay, we've got some big numbers here. The 3's not really a relevant point, actually. It kind of debunks me right away. But needless to say, when we're looking at gold, people have a lot of emotion around support levels. The 2000's a prime example. How many times did it whack the 2000 price handle, US dollars an ounce, and it retreat? Whacked, retreat. It's tested it 4 or 5 times before it eventually broke through. The 3000 didn't really happen like that. We did get some support around the 3.3 level, but the 3000 was not really like that. It kind of just busted through. It busted through, test. So it just punched through that support, all right, which can happen, and then it sort of consolidated around here. So the 3000, it's not an outlier. It does kind of break down the support velocity, whatever, slightly. The 2000 supports my claim, a lot. The 3000 doesn't. So honestly, flip a coin. I believe the 4000 is going to be a major support level. It's a big number, it's a round number, and if you look at the exponential returns in gold, it cannot keep going up at this pace forever. It is going to have to cool off. I don't care how much of a gold bull you are. The volume can't support this rise. Let's just look at volume lately. Well, yeah, we're on daily price bars. Volume is the highest it's ever been. For this to continue at this rate and almost a vertical cliff going up, it's going to require an immense amount of volume. Gold is a humongous market, somewhere in the trillions, I believe. It needs so much volume to support that price. I mean, how long can we continue to go, well, is this volume 6 billion shares of gold traded in one day or something like that? I just don't think it's obtainable. I think it's going to have to consolidate. It's going to have to cool back. And I'm calling it here. The pullback is now. That's my play. Simple, could be wrong. Hence, I took a defined risk trade. Zooming in a little bit, I got my position here, which was Friday market close. My whole game plan is if we punch through the 4,000 level, there's going to be blood in the water. That's my thesis, really. We punched through it last night. Now it's kind of starting to test that level. Punching through doesn't mean it keeps going. It's not like a hard stone wall. It's not the Great Wall of China. Prices can punch through and bounce several times. See it as a range, like 4 to 3.9 is a range of support, right? Punching through doesn't necessarily mean it keeps going down, but if we punch through by a decent amount, if we punch through to here, I just think the price is going to go a lot lower. Now, another thing to take and consider, a lot of traders place their stops around key support levels, big round numbers like 4,000. I was watching this last night on a minute time frame, and the moment it went just below 4,000, like 395, the red candlesticks were massive because it was just hitting stops and liquidating positions like a fucking wrecking ball. If this can get through and punch through a little bit more, I honestly believe we're going to see a significant drop of gold. I'm predicting you get to the 3.6 level, right? Doesn't mean I'm bearish gold long term at all. I just think we could be in for a decent pullback. Hence, I'm putting my money where my mouth is. I'm going contrarian, way against the grain. And I've gone short gold when everyone else is bullish gold. So that's where I'm at. That's my loose thought. Now, so far, I'm right. But we're at the crucial point where it's testing that 4,000. It may test it for a week, it may test it for 4 weeks. If it fails this test, I think I'm going to be rewarded handsomely. If it doesn't fail this test, if it finds its resistance around this mark and then eventually starts trickling up, I'm wrong. Cool. I've got a defined loss of $500 US. I'm happy to be wrong. And that's my gold trade. So far, things are looking good. But I really think if we punch down below here, there's going to be a sell-off. There's going to be blood in the water. Because when people join speculative runs, like you can't tell me this isn't speculative. When the average man who doesn't trade much, your grandma, your nan, or whatever, starts to fucking buy gold because it's gone up 100% in the last year, those people have paper hands and they will fold in the sign of blood in the water. So let's see how we go. Bold claim. Now I've got to go through this shit again. Haven't finished talking about my positions. So, covered my gold trade. Let's keep going down the list. I think UNH is next on the portfolio list. Um, sort yourself out, please, mate. It saves like this for ages and it really annoys me. It doesn't show positions properly. I'm gonna have to do this again, aren't I? Oh no, we're right. Okay. Where the hell? Where is my P&L and why has it moved? What? Let me pause this and I'll work it out. Okay, problem solved. So next on the list is UNH. UNH were up 48.6%. Now, I did go in, linked to UNH, I bought a leveraged UNH fund. It gives me 2 weeks leverage on United Healthcare, right? Sitting about break even on the dawn of an earnings event. Risking 1,000 US on this one, so about 1,500 Australian. Currently, my UNH position is about 2,000 Australian. So we're about 3,000 Australian in on risk with UNH on the precipice of a major earnings event, which is going to be announced pre-market tonight. So tonight, my time, about 7, 8 o'clock, this position is going to get absolutely wrecked or it's going to do well, somewhere in between. I actually kind of don't think I should have gone in on a leveraged UNH fund. Could regret saying that, it might pay off tonight, but yeah. I'm not like super confident on it. But let me show you what's going on with UNH. Oh, I've got to do my usual brag about my the position I brought in on UNH. Look at that. Look at that, mate. This line is when I got my position in UNH. The bottom of the bottom. I bought the dip of all dips. I bought the dip before Warren Buffett brought the dip on UNH. I was first. We were here. Look at that. 247 buy-in. I love bragging about that. It's like a sniper entry point. So that's why we're up quite a bit. We're up 48% just because of that buy-in, right? The fucking leverage fund I got the other day at whatever the price is now. Anyway, UNH, we got in here. All right, we're doing it right, but we're on the precipice of earnings, and I, like an idiot, bought a leverage fund. So it's going to be some aggressive volatility tonight. We have earnings announced pre-market. Today's the 28th. Batter up at about 8 p.m. tonight, Perth time. Let's see. Flip a coin, mate. I got no idea where these earnings are going to go. No idea. It's missed every other earnings in the last sort of 3 months. So we're right at sunset. So let's see. Let's see. Not much to say about that. I've done almost no research on this company. The returns on this are 100% luck. I've got nothing to say about it. I know you want some hardcore DD, but I really just don't have it on that one. Reddit, doing good. Bouncing back a little bit. It was suffering for quite a long. Once upon a time, was up 75%. Weathered the storm, down a little bit. Yeah, that's my biggest size actually. So 5.6. You're looking at about 8,000 Australian on that one. Everything has earnings coming up. Reddit earnings. Fuck, it's earlier than I thought. A couple days. Because this is the largest stock in my portfolio, this will manhandle my port. If this is a bad readings, I might be near finished. Yes. The earnings here are going to be so aggressive, man. Like volatility wise. It's either going to, mark my words, come Thursday, the earnings are going to plummet the stock by 30%, or it's going to rocket by 30%. There's no in between in my eyes. There's really no in between because it's such a news, like, I don't think I IPO'd last year, and it's just the earnings have been throwing the fucking thing around, because nothing's really too certain about a moment. They're doing good, they're making money and looking up, but it's 30 PE ratio, forward PE or something like that, which is kind of pie in the sky. So if they sniff one thing off in these earnings, it's going to plummet. Or if it's good, we laugh. Again, flip a coin. Coming up. Nothing to say about SPY. Snap is a stock that I'm wheeling on my step-by-step guide on how to wheel a stock. Snap earnings coming up next week. This is my wheel play. Don't even talk to me about Snap because the company's the shittest company on the stock market. And you're probably thinking, why did you wheel it? I did what I did, mate. I did what I did. So we're trying to wheel the stock. Basically, I went short couple put contracts at the 750. They expire just after earnings. If earnings is bad, I'm going to get assigned. Likely going to get assigned. If earnings is good, sweet. I'll let the puts expire worthless, and I'll start selling covered calls on the other side. We're just going to continue to wheel this. I'm tracking the progress. I'm wheeling every 30 DTE. We're going to track the progress over the year, see what happens. You don't want to wheel stocks you're really that bullish on, to be fair. You want to wheel more sideways, slightly bearish, slightly bullish. Snap's a bad deal. It's either going to be aggressively bearish, aggressively bullish. But anyway, I done a whole video on this if you want to get into it, but not much to do with Snap. They're going to miss earnings, I'm telling you. They're fucking shit show of a company. They never made any money. But here we are. Okay, that's... Okay. I've gone short IONQ. When I say short, I brought a put contract in IONQ. You're going to love this one. Why isn't it showing me this little column on the right that shows me how... Alright. Let's just get up some stats here. IONQ is a quantum computing fund. You know the whole qubit and quantum computing and fucking whatever. It's a quantum computing fund that is valued at $21 billion that makes no fucking money. The CEO has sold all his shares. I think the CEO owns no shares in it. So even he knows that this is a fucking scam. I'm sorry if you're bullish this company, but it is a complete rot. I'm telling you, they're never going to create a quantum computer. They're going to just rip off all the shareholders, eventually ending the stock at fucking a big fat zero. The first movers on quantum computers are already established. I'll mark my words. It's going to be Google. It's going to be Microsoft. It's not going to be some shitty scam company where the board and the CEO are just funneling and rug pulling and pump and dumping. It's just not. It's so speculative. $0 made. Diluting shareholders or whatever. So me and a friend of mine have decided to start shorting. We've got about 4 of them. We'll start, buying puts or shorting, whatever. These fake fucking fraud quantum computing companies. So anyway, I brought a put for December. Buying puts kind of sucks because you're paying massively for implied volatility, especially with shit like this. But anyway, I bought the 45. They've got earnings coming up, which they will fail earnings miserably. Always have. And these aren't even like proper revenue, man. They're like sketchy fucking whatever. I don't know. I even want to... They're gonna... My prediction anyway is they miss earnings bad. Eventually people realise that they've been fucked by this stock and it rockets down and I make a pretty penny. That's my play. That's my play. I can get into it a bit more, but I've got things to do. So short some sketchy quantum computing stock, right? And that's my port. That's how we're sitting. Fuck, something's going down. Why is it going down? Oh, not really. The only reason I'm saying that is it's not even pre-market yet. And Why does that say? Is something happening in the market live when I'm filming a video? Why does that say 13.7? Who knows? Funny things happen when markets aren't open and things aren't really that accurate. Have a quick squeeze. Might have something to do with the price of gold. How funny would that be if I click on gold right now and I just went on this huge rant about gold, that I'm bearish gold, taking a short position on gold. How funny would it be if I click it right now and gold's just shot up by 10%? Nah. Dreaming. I think something's happening in the market, but I can't pin it. Because it's pre-market, I can't see much, but sometimes we get... Honestly, who knows? Who knows? All right, that'll do for today's video. I think I've covered everything I wanted to cover. We're about to hit in the next 10 days 1, 2, 3, 4, 5, 6 extremely violent earnings calls. So next time you see this, I'm going to be big grin on my face because my port is rocketed up towards $20,000 and we're about to hit that third doubling event. Or you won't hear from me a while, I'll cower away, or I'll just do a video and I've sliced my portfolio in half or I've been margin called. That's the two options for me in the next 10 days. Batter up. First one stepping up to the pad and throwing that fastball is UHN pre-market tonight. Pray, because this is the beginning of the earnings war of 2025 and the start or end of my portfolio. So I want everyone to be praying for me and let's see how we go. All right. Thanks for watching. I'll put a link in the description. I have a little website where I do free due diligence report. I've only done 2. I want to do some more when I need some time. I've done one on LEU and I've done one on the wheel strategy, which more is a step-by-step option guide on trading the wheel. Put a comment. I'll put a comment to link to the website. It's all free of charge. Help yourself. All right. Thanks for watching, guys.